So, if I had to start day trading from scratch in 2026, knowing everything that I know now from making $30,000 a month every single month, working an average of 2 hours a day and cashing in as much as $15,000 from a singular trade, I do things completely different than what I did when I first started. Because see, when I first got into trading, I spread myself tooth and across dozens of strategies to find out what works the best, and I ended up losing $50,000 in student loans money. And I really wish I was joking. And for a good year, all I could see on that chart was red candles, nothing but red. But if I were to start today, I would become profitable basically overnight. How? Because after all these years of work, I finally found the easiest 3-step path to start day trading in 2026 as a complete beginner. So in this video, that's exactly what I'm going to break down, and I'm going to do it live in front of you. Make sure you leave a like below and subscribe to the channel, and let's get right into it. Now, when I first started, I was convinced the answer was just to find the perfect strategy. Because if you find the one that everyone's gatekeeping, you'll never lose a trade in your life. And that's what I thought. So I kept collecting more of them and jumping from one strategy to the next strategy every time YouTube showed me something new. And every time a setup gave me a few red days, I'd get spooked, toss it out for the next shiny thing. Now, the problem with that is that every single time you switch, you throw away all the progress that you built and you start right back from zero. Okay, so to put this into perspective, let's take a very famous person, for example, Messi, for example. Imagine he's just a kid and he's getting bored of soccer because he's not the best one on the field quite yet. So right when he's about to break through at maybe 18 years old, or whenever he actually did, he quits and goes to play some other sport instead, or try something completely new. And just like that, the greatest player we've ever seen never happens because he moved on to the next shiny thing. Now, thank God he didn't do that, because look where he is right now, one of the greatest players of all time. And yes, I do think Messi is the GOAT. But that is what most traders are doing to themselves. They give up on the setup that was about to start paying them, usually about a month before it actually would have. So the first thing that you have to get, and trust me on this, is that the boring path is the easy one, where you pick one setup and you run it long enough that you can actually spot it in your sleep. Now, this video is not about just sticking with a strategy, because I'm not gonna lie, there are strategies out there that are working better than others. And the one that worked the best for me and got me out of that 50K student loan debt is pretty simple. Actually, this leads me to step number 1, learning how to read the map. Because what most beginners do when they open your first chart is that they see price shooting up. They get that feeling in your chest like you're about to miss out, and boom, they jump right in and press buy. Then price turns around and drops the second that they get in, almost like the market makers know exactly where you put your stop loss, and it stops them out almost instantly. And the part that hurts a bit is that the market knew exactly where they'd put it, because they put your stop loss in the same obvious spot everyone else does, right under the recent low, thinking that there's a safe place for it. So they end up doing the opposite of what a great investor and trader does. They end up buying at the top, getting knocked out at the bottom, over and over. And they start to think that the market is just rigged against them. And to be fair, it kind of is, but not for the reason that they think. Nobody ever showed them that price moves for a specific reason. And once you see that reason, the whole chart changes, because the market isn't random. Every single day, the market moves from one pool of money to the next, and traders call these pools liquidity. Now, I want you to think of these pools like fuel stations that the market has to keep pulling into. And look, here's why they even exist in the first place. The big players, like banks, hedge funds, whatever, they're moving millions of dollars at a time. So to get an order that size filled, they need a huge stack of orders sitting in one spot to trade against. So where do you think all these orders are sitting? They're sitting right where all the regular traders, the retail traders, are putting their stop losses, because everybody dumps their stops in the same obvious spots, and that turns into a fuel station for big money, AKA liquidity. So what they do is they push price up straight into that spot. grab everyone's stop loss orders, and then turn around and run the actual move of the day in the other direction. And I know, it's a bit hard to wrap your head around that at the beginning when you first start trading, but once you kind of understand it, the whole chart stops looking random to you. You start to see that price is always getting pulled towards the liquidity, so if you can find where that liquidity is sitting, you can basically call where price wants to go before it even gets there. And the part that makes this so easy for a beginner is that the cleanest liquidity on the entire chart is what I call your session levels. Okay, so the trading day breaks into 3 sessions: Asia session, London session, and New York session. And each one opens, runs, and leaves behind a high and a low. These session highs and lows are your fuel stations, aka your liquidity. So every morning, all you're really doing is marking out those 3 sessions, your highs and your lows, that each session left behind. You sit down, you draw a few lines, and just like that, you've got your whole map for the day. Easy enough to comprehend. Everything else on that chart is simply just noise trying to pull your eyes away from those levels, okay? Okay, so now, let's say Asia runs overnight, leaves a high sitting near the top of your chart, and then London comes in and leaves its own high and low underneath it. Now New York opens, price rips straight up, and it pokes right through that Asia session high. If a beginner sees that, he thinks price is breaking out and it's about to run without me. So he FOMOs in and he presses buy. But that's not actually what's happening though, is it? Price just drove straight to the liquidity, grabbed everyone's stop losses, and now it's about time to turn around and go in the opposite direction. Now, to be clear, session highs and lows aren't the only form of liquidity out there. You can also use previous day's highs and lows. Those hold fuel too, and so do the highs and lows from every hour. So you can do hourly highs and lows. But when you're brand new, I want you locked onto those session levels and nothing else, because they're the cleanest and they show up at the same time every single day, and your charts won't be clustered with a bunch of different lines everywhere. So that's step 1. Where you draw the map and you start to see that price is always hunting for those levels. Now, the map only helps you if you know the exact moment to move, and that is step number 2. So step number 2 is waiting for the tell, the sign, and this is where most beginners blow themselves up. The mistake almost everybody makes is that you're jumping in whenever price touches one of your levels. No. What they do is they watch price come up to that Asia high, they get excited, they hit the buy button, hoping it keeps running, and that right there is just gambling. What you want to wait for instead is the tell, the sign, aka confirmation. Price doesn't just tap your level, it blows clean through. It grabs all the stops sitting there and then snaps right back inside the range. Now that snapback is the big money showing its hand, because it means that they grabbed the liquidity that they needed and now they're turning around to do the move of the day. So you wait for price to sweep the level and reverse, and that reversal is your green light and your confirmation to get into the trade. So let's finish that Asia session example so you can get the full picture. Price pokes through Asia session high, it takes out all those stops, and then instead of running higher, it rejects hard and drops right back down inside the range. That right there is your tail, so now you've gotten into a short position. Your stop goes just above the high that they just swept, because if price climbs back over that level, then you were wrong and you get out cheap. And your target is the next level down on your map, which is the next fuel station, the next liquidity that price is going to get pulled towards. But before we move further, I want to warn you about the trap here, because there is a fake version of this confirmation that looks almost exactly like the real one. Price pokes through your level, but instead of snapping back hard, it just kind of drifts and hangs around up there, which means price actually broke through and it's going to continue higher. So if you jump in expecting a reversal, you're going to get run right over. The tell you want is violent, where price snaps back through the level, grabs the stops, and rejects fast, slamming back inside with real force behind it. V-shape recovery. When it's slow, mushy, consolidating, stay out of that. And when it's sharp, fast, that's when we take the shot. And to give you a better taste of what this actually looks like right now, I'm going to share my screen and I'm going to do it live in front of you. Okay, so for example, we can even take today's price action because this is literally very, very recent as I'm filming this video. So you know it's not bogus. Let's fast forward to the start of today, for example, right? You see I had this level already marked out. What is this level? This is the high of London session, correct? This is the confirmation that we were talking about. On the 15-minute time frame, what does price do? Violently snaps back above the high. Remember, I said if you had just gotten into a short position just like this without waiting for confirmation or anything like that, it would have instantly stopped you out. If you're getting into a buy position because you think that price is going to continue going higher as well, I'm about to fast forward through this clip and you're going to see that it instantly cooks you as well, because the very next candle, boom, is a violent V-shaped recovery. This is what I meant by violent. You want it to be extremely violent and quick. If we drop down to the 5-minute time frame, you can see extremely violent and quick. If we drop down to the 3-minute time frame as well, look, extremely violent and quick. Poke above our level, it keeps trading higher, then boom, in 2 candles, 1, 2 on the 3 minutes, extremely violent and quick, right back below our level, get into your short position, stops above the high. Where are we targeting? We can target the next session levels, and we can target these session levels all the way down here. And as you can see, it's already winning. This is your first TP. You can now move to break even. Your first target has been hit. You can now move to break even, and then you can just keep playing it along. And now, boom, this is the most current price action. You would still be in this trade and you're waiting for your final 2 TPs to actually get hit. It's textbook. It works every single day and it runs literally just like that. So that's step 2 pretty much, where you stop chasing every move and you wait until that one clean sweep and rejection before you touch anything, which brings us right down to step number 3. Step number 3 is getting out of your own way. And to be real with you, this is arguably one of the hardest ones of the 3. And it's hard for kind of a strange reason, because it actually feels like you're doing nothing. And it's almost as simple as it gets. The second you're in that trade, your job is already finished because your stop loss is set, your target is set, and the plan is running on its own without you. So you close the laptop and you walk away. It's what I do every single time I take a trade. And in the live example that I showed you, I would do the same thing, but I can't because I was trying to show you an example because I'm recording this video. But now, I know how weird that may sound, but that's exactly where most beginners actually lose all your money. They stay glued to the screen. And when price starts dipping for them for a second, they panic. They're dragging your stops, moving it in closer, trying to partial early, trying to move quickly. Then, when it ticks green, they get greedy, pulled your take profit away too early, and they just sit there, sweating over a perfectly good trade until they've squeezed every last bit of life out of it. And I know this because it's exactly what I used to do. I'd get a clean entry, then I'd watch every candle until I talked myself out of a winner. And I gave back more profit that way than I would actually like to admit. And the crazy part is that none of those losses came from actual bad setups. They came from me getting a clean entry and then taking myself right out of it until I moved something I never should have touched. Now, I get that sitting there, watching your money move around is very nerve-wracking. I would be too. So every dollar you give back after a clean entry comes from you messing with the stuff that you already set. So set it down. Go make yourself some breakfast and come back when the trade is done, because the best traders I know are almost lazy the second you're in. And that patience is the real skill that nobody actually talks about, because it's almost like a muscle that you have to grow before you can sit still and resist that temptation. The good news is it gets easier every single time you do it. You walk away once the trade works out, then you do it again, and before long, leaving the trade alone becomes the normal thing instead of the hard thing. So that is the easiest way I've found, not just for myself, but for hundreds of my students to start day trading from scratch in 2026. You read the map, you wait for the confirmation, and you get out of your own way. And I know, it sounds way too simple, but if you pull those 3 things off, you're already miles ahead of almost everybody who jumps to a new strategy every time they take a small loss. Now, this was the quick version of me explaining it. If you want me to actually walk you through exactly how I do this on the charts every morning, make sure you're subscribed because I go live almost daily showing you the behind the scenes of how I'm pulling 30K plus a month. And if you want the full thing laid out step by step from the exact session times I trade to the checklist I run before every entry and how to read the sweep so you can spot it yourself, I packed all of it into a free course here on YouTube that takes you from your very first chart to your first payout. So click on the video on the screen and I'll see y'all boys in there. Thanks for watching. Peace out.